In this video, I'm going to teach you the best way to trade liquidity sweeps. Now, you may ask me, Faz, why do you have so many strategies on this channel? The thing is, if you're looking for one strategy, this channel is not for you because my goal here is to teach you everything that I know about trading so you can pick one trading strategy and trade it by yourself, okay? I cannot give you one strategy and everyone just starts trading that strategy and magically everyone is profitable, okay? But I assure you, I promise you, whatever I'm going to teach in this video and whatever I have been teaching in the past, they work. Okay, there are a lot of people who have got funded, got their payouts through my free YouTube videos. Okay, this is literally all you need. If you trade this strategy, you do not even need to watch my other videos. Okay, just trade this strategy. Okay, but if this strategy doesn't align with you, then you can watch other videos. But this strategy is very simple. It is based on liquidity sweeps on the 1 minute time frame, and I'm gonna go over each and everything. I'm not gonna skip anything at all. So first thing first, what we gotta do is we have to identify the order flow on the 5 minute or 15 minute time frame. Okay, what is an order flow? So let's say that price is continuously making lower lows, lower highs, lower lows, right? Now this is considered a bearish order flow where price is going down towards something. So there must be a higher time frame draw on liquidity where price is going towards, right? So your draw on liquidity, it gives you extra confidence. So if price is in a bearish order flow and on the 1 hour time frame or 4 hour time frame, we got equal lows or we got session low or daily low, right? Price is definitely gonna take that out. Now, that is step number one. Once we have the order flow and we assure and confirm it with the draw on liquidity that is resting below, we can be pretty confident. Now, the next step is, again, of course, is identify draw on liquidity. The third step is where our entry model comes in, right? And we need to find a way to take trades, right? Because even if the price is in a bearish order flow, right? And if you take a short position here, price can go up and then go down and stop you out. So this entry model, this liquidity sweep entry model is so strong, guys, that once you understand this, you're going to start seeing this pattern everywhere. And I'm going to give you guys a lot of examples and you will not be confused. So once you have identified the order flow on the 5 or 15 minute, once you have identified your draw on liquidity, which is, let's say, down there, right? What you need is you want to drop down to 1 minute time frame and make sure your time zone is set to New York. Now, our trading window is from 9:30 till 14, okay? So we can only trade till here and find these patterns. 9:30 a.m. New York time till 14. So what we need first is a push down, okay? So let me show you the entry model, what we need. So if we are in a bearish order flow, we need to see price first pushing down like this and then getting a pullback, okay? Once we have a pullback, we have a range low. So this is range low, okay? So let me just do that, range low down there. Now we need to identify a range low, but how do you actually identify it, right? Because let's say price is here and you say, okay, this is range high, okay? That is a wrong range high. This is not an actual range high and price can do anything here. In order for that range high to be valid in this case, what we need is a market structure shift like this. So we have a higher high, higher low, and higher high. And I want to remind you, this is on the 1 minute time frame. And then we need a market structure shift. So in other words, we break a higher low that was formed within a pullback, okay? So first we have initial push to the downside, and then we have a pullback, and then within this pullback, we have a market structure shift towards our original direction. Now, this is not it, right? Because a lot of people, what they would do, they would see this market structure shift. Okay, we are coming from a fair value gap. We have liquidity sweep, right? And then we have a market structure shift. I promise you, 80% of the time, you're going to get faked out, okay? So there's a way to mitigate that. So once you have the market structure shift, that becomes your range high because this high caused a market structure shift, okay? So this is going to become your range high. Now there's liquidity to the upside and there's liquidity to the downside. And knowing that our draw on liquidity is to the downside, we can play this out very nicely. So let me show you, okay? So pull a push to the downside, right? Order flow is bearish. and then we have a pullback. Within the pullback, we have a higher high, higher low, higher high, and then a market structure shift. Now we have a range high. Now the next step is then waiting for price to sweep out the range high. We do not want to see price sweep out the range low before our entry. So we need this pattern to form before we can take a short position. So we take out the range high. The next step is waiting for CIST. So if we have continuous bullish candles here and price closes below those continuous bullish candles, that is your sign to take an entry. So there are two ways that you can take your entry. You can take your entry at the retest, or you can enter aggressively. I like to enter at the retest. And then I'm going to target the range low. Okay, simple as that. But sometimes what price will do is price will reach somewhere around here and then reverse. Okay, so your best, the best way to take your profits here is turn on the 0.75 or 0.71. Ideally, I like to go with 0.75 and then take my profits at 0.75 up the range. So from this range low to this range high, I take my profits sometimes here. That is like the safest way that you can take your profit, but eventually price will go down towards the range low. Okay? Simple as that, guys. There's nothing extra about this. What we are looking for is a push to the downside in a bearish order flow and then a pullback, right? We then wait for a higher high, higher low, higher high, and then a market structure shift that actually forms the range high. That is where the liquidity is resting, okay? Now, the institutions, they know what is popular, right? Smart money concepts are actually way more popular than the retail concepts nowadays. So with that logic, okay, you can say they are going to get another sweep. So this is going to be a 3-strike pattern that ICT teaches, okay? So you can call that as well, but I'm simplifying it for you. And that's pretty much it. And then, of course, if you inverse it, same, if you have a bullish order flow, right, then we need to see price first pushing up and then getting a pullback. And then within a pullback, we get a market structure shift. Now, once we get a market structure shift, which is right here, this becomes the low that caused the market structure shift. Within a pullback, it becomes range low. And then we need another sweep, which is a 3-strike pattern over here. Once we have another sweep, right, that's when you look for CIST or market structure shift. You can also take inversion. And one more thing, guys, I forgot to tell you about this. We must close back above the range low that was swept. So this is the range low. When we sweep it, I also want the price to close above the range low, okay? And then we can look for CISD and stuff. So, and then we can target, of course, the range high or the 0.75 of the range. Your stop loss is going to go below this low over here. Now, you can also add SMT confluence, but I don't use it. But you can, of course, to increase your probabilities. But now, let me give you guys some examples, and then I'll end the video. All right, guys, so here is example 1, and this happened today. So, first thing first, guys, let's go to the 5-minute time frame and see what is going on. So we were clearly in a bearish order flow. Why? Because the bullish PD arrays are being disrespected, right? So we had these 5-minute bullish fair value gaps and they were all disrespected. And then we respected the bearish fair value gap over here and then we pushed down, right? Now, where could price be going? We have clear Asia low to the downside, right? So that is your draw on liquidity. Now, let's go to the 1-minute time frame. We know our order flow is bearish. So step 1. We have a push to the downside that is aligned with the bearish order flow. Step 2, we have a pullback. Now, step 3, we need a market structure shift within a pullback, right? So right here, as you can see, we have a higher high, higher low, higher high, and then we take out this low. So now we have a range low established and a range high established. So now we need to see the range high being swept. We're not going to take a long position if price takes out the range low first before taking out the range high. The setup is invalid immediately, okay? So if I push this through, you can see we took out the range high and then we have consecutive bullish candles that swept this high. So right here, we have CIST, change in the state of delivery, right? And then we're going to take our entry here, stops right above the high, and we're going to target the range low down there. So let's see how this plays out. Bam, just like that. And once the range low is taken out, you guys can see that price pushes up. But notice what happened here. Since we still haven't taken out the Asia low, we can still look for shots, right? So we have an initial push to the downside, and then we have a pullback. Now, if you look here very closely, guys, we had this low formed here within a pullback, and then we had like a market structure shift, right? Now, I want to be clear here. A valid market structure shift is going to look something like this. So it cannot be this, okay? This is not a valid market structure shift. What I need is a fractal low to form like this. So for example, we formed this low and then we had a push up. So on fractal basis, we formed this low, right? So with that out of the way, you can see we have range low. And since we have had a market structure shift, this becomes our range high. So let's see how this plays out. We first need the range high to be taken out. So price accumulates here and then bam, right there. As you can see, we then took out the range high. We had IFVG here as well, you could say, right? Beautiful. Or you could say that we had CIST. So let's say you took your entry over here, stops right above the high, and then you can see that we took out the Asia low. So 1 to 2 over here literally just melted down because we are using logic here, okay? A lot of people who took this market structure shift entry, yes, sure, they might have made some profit here, but if you want to catch the actual move, right? And no, we're not looking at any fair value gaps here. We're just following a simple liquidity sweep pattern that actually genuinely works. Let me give you guys a couple of more examples. All right, guys, so here is another example, and you can clearly see that we have taken out the London low, and now we're pushing up, violating all these bearish PDRs. So we had a bearish fair value gap over here, and we inversed above it, right? And we are in a bullish state, and also we have these clean equal highs resting up here. Now let's go to the 1 minute time frame, and let's see what happened. So we have the initial push, so we can just mark out the range high. Now we need the range low to form, right? And the way it forms is pretty simple. We need a market structure shift within a pullback, okay? So let's see, let's wait. Okay, perfect. So we have a lower low, lower high, lower low, lower high, lower low, and then a fake market structure shift, right? Now, this becomes our range low. And now we have the 930 open as well. So let's see what happens. We are waiting for CIST or inversion, but that doesn't happen. We get another sweep to the downside, and now this would be my CIST level. And right there, guys, we have CIST closed above the bearish candle. We take our entry here, stops below the bodies of these candles, and ideally you would target the range high, but in this case, you're only getting 0.86. So at least I want to get at least 1 to 2 RR. So what I would do is I would go break even once the range high is taken out. And that puts me in a safe spot. And right there, we hit the 1 to 2, we took out the equal highs, and bam, we are done for the day. Okay? It's really that simple, guys. Please go and backtest this strategy. Don't go on to the live markets before backtesting. See it for yourself. It works. Please, if it doesn't work, you can let me know in the comments and you can just unsubscribe. But I promise you, you're going to come back here happy. I'm going to see you guys in the next one. Take care. Goodbye.